But let's take it across to Andrew Holland as well. He's joining us from Avendus Capital Public Markets to talk to us about the way forward. Andrew, what do you believe about the market mood right now? Do you think it's going to be a lot more sideways till that big event of election is out of the way, or even ahead of that, one can expect much higher levels for the Nifty?
So you could have pretty much nailed it in terms of saying that confidence is back after that kind of shaky regulatory kind of fall in the small and mid caps. And I think that's, whilst it's not kind of so broad based at the moment, I think the markets have absorbed that and moved ahead. Obviously helped by global factors as well. And again, I think the momentum, in global markets is to the higher side. I saw reports today saying that Europe's looking cheap. So, and with China kind of, coming back a little bit with some of the data, I think that just bodes well for the markets in the short term. I still think there's possibility of still a pre-election rally. Given the kind of the positive tailwinds we're getting from global markets, and as I repeated myself, the confidence that the market's now feeling again after that bit of turmoil in the middle of March.
So Andrew, what's keeping you busy? Where have you taken chips off the table? Where are you looking at adding more positions?
So we've been adding more to the banking sector, Nikunj, because we've got the results season coming ahead of us, and I think there's two factors that the investors and we're all going to be looking at is really the confidence from the IT sector and the banking sector is the worst behind us. I still think for the IT sector, you're not going to get that kind of commentary. So I still think the IT sector is more of a play on interest rates coming down in the US, which gives the catalyst for the tech companies there. I think for the banking sector, if we're getting to the point where banks are saying that, the worst is over for NIMs, and you could look forward to kind of lower interest rates going forward, I think that's the key. If that was to happen, then I think the banking sector could lead the whole market higher again. And I think we're starting to see that stability in some of the share prices, of the larger banks, which have been under pressure, starting to kind of move forward again. And maybe the NIM story is something that's behind us, and the banking sector can actually kind of outperform, which it did last month. But it's been a huge underperformer for the last 6 to 7 months anyway. So I think that would be the catalyst, I believe, for the markets of that kind of pre-election rally.
Quite a bit of crack on ICICI Bank today, right? I mean, of course, there are others like Axis, Kotak as well, which are falling today. But particularly ICICI Bank, given that you've always said that this is the leadership stock within the Nifty Bank. What is it telling you?
Again, I think it's telling you that the private sector stocks are still not ready to get into a very strong breakout mode. So I think there was a phase where I think yesterday or day before ICICI Bank had come back to that 1100, 1120 mark. We were discussing this, that 1120 is a resistance zone, and it's always prudent to try and buy the stock on a confirmation of a breakout rather than anticipation of a breakout. Now, in that aspect, even the likes of Axis Bank, IndusInd Bank, these stocks have come very close to their breakout points, but they've not provided that much needed breakout for themselves in their respective shorter term time frame charts. But on the other hand, what we are seeing today is HDFC Bank coming out after I think 1.5 or 2 months of consolidation, breaking past about that 1470, 1475 mark. So this is almost like a 100-pointer range breakout for HDFC Bank. The stock is still reading below its 200 moving average. Today it's just managed to break past or retest the 50 DMA. So I think if this 100-pointer range gets prolonged for HDFC Bank, we could be looking at 15, 40, 15 levels for the stocks. That could be the only solace for the private sector banking names so far.
Andrew, haven't we discussed this time and again that, okay, go and buy banks. Just buy banks. And please buy private banks because they are cheap. They've done nothing. They have good balance sheets. They have good credit ratios. Buy banks and buy both Kotak and HDFC Bank. I think this is the most consensus common trade across brokerage firms, across sell side, across buy side. Yet, nobody cares.
Yeah, I know it's a good point. We've all been sitting there underperforming. But, Nikunj, what I would say is that, you've taken some of the pain of some underperformance. But again, within that, you've had through the results season, you've had that opportunity to make some good money, both on the long side and the short side. I think that's what a lot of fund managers have been doing, including us. So take advantage of some of these movements within the sector. So you might like the banking sector, but you don't have to be, because we run a long-short fund, we don't have to be in love with any one stock. Be either on the buy side or the short side. So that's how you could have maneuver your way around within the sector. And of course, then you can look at PSU banks and NBFCs as well as part of that play. So it's there's money to be made, just necessarily not in some of the larger banks in the very short term. But I think that's going to change if the NIM story is going to be stabilized, which I think it will be now.
Very well for itself. It is Aditya Birla Capital along with Aditya Birla Financial, Aditya Birla Retail. Now, Aditya Birla Retail, of course, news specific. What Aditya Birla Retail is doing is they're splitting the business in two parts. They have a lifestyle business which includes brands like Louis Philippe, Hans Innerwear. They've got that, all the lifestyle brands which account for bulk of the cash flow and bulk of the profit, that would move into one entity. Second, they've got all the recently acquired businesses, TCNS Clothing, they've got Galerie Lafayette, they've got some designer brands where they've picked up off late. All that low margin, high growth, futuristic business moves into another basket which will have debt component which will be much higher. So somewhere markets are saying, okay, now you're separating really the good and the bad business, and this could take about 12 to 18 months, but it's an attempt in the right direction where the Birla Group, which actually went on an acquisition bench, just think about it, what all they've acquired. I was just counting. They acquired Pantaloon, they acquired Galerie Lafayette, they acquired Forever 21.
I'm just talking about brands which released to us.
Sabyasachi as well, right?
And Sabyasachi as well.
I think Ritu Berry,
Yeah,
TCNS Clothing.
correct, yeah. Quite a few actually.
And their main brands which give them cash is actually Alan Solly, it is Louis Philippe. Those are the brands which give them cash. And those are, Madhura Garments के अंदर हैं सब वो lifestyle brands. And you are actually not getting the true value of that brand which has built the business. You've gone in an acquisition bench, and that is what they're trying to do.
But you really think this can reverse and probably get them closer to Trend's performance? I think by a huge difference, it's just poles apart right now.
Trend is a retailer.
Yeah.
Madhura Garment is like a fashion house.
Aggregator of sorts.
Aggregator of all sorts, where they are retailing and they are only into apparel. Trent has managed to break the code by Zudio. I don't think anybody has really gone anywhere close to getting that format right, including good old DMart. Plus, Trent has got Star Bazaar, where they moved actually into grocery retail. So they managed to crack the code in terms of keeping it highly affordable, keeping it very simple, and only expand when a balance sheet allows you. On the other hand, Aditya Birla Fashion has gone on some kind of an acquisition bench. Do bhi milta hai, le lo. Whatever is available, just keep on buying it.
The Collective, Galerie Lafayette, lots of other luxury brands, Jaipur, Masaba, Sabyasachi, TCNS, Pantaloons, and these are all under AB Fashion. What you were talking about, which is the mainstay business, the cash generating business, and that has more affordable line. Surprisingly, Forever 21 and Reebok is under Madhura Fashion. So is American Eagle, Peter England, Alan Solly, Van Heusen.
Van Heusen is a big brand. Louis Philippe is a big brand. These are the brands which essentially dominate the men's fashion brand, formal wear. Market leader there. And look at the market cap. Why? Because you've made such unnecessary acquisitions. I think they've moved also into ethnic wear. I was reading it somewhere. And my jaw dropped.
Sabyasachi and all his ethnic portfolio itself.
Proper.
And Jaipur and Masaba.
Yeah.
CNS, Tasva. Yeah.
I'm guessing there'll be a lot more coming as well.
Andrew, your comments?
Well, I can't comment on the individual stock, but
on the brands, not stocks.
I've seen some.
You can comment on the brands, my friend. Masaba, Forever Young. You can Forever 21. Forever 21. I beg your pardon.
Let me ask you, Nicholas. Are you wearing any Peter England shirts or Alan Solly? Or?
No, it's just it's an old suit which I picked up from some other retailer.
Trend?
No, it's Zara.
Yeah, so Trent.
Trent as in, yeah, Trent is the
Yeah.
owner. Trent is the owner, yeah, of course. Yeah, my bad. But yeah, in the menswear, if you really think about it, stock which have done rather well off late, and I think that's Raymond. So, while we may talk about Trent and we may talk about Aditya Birla Fashion, Raymond has managed to hit out of the park because of this sheer restructuring they've done. They've sold their so-called consumer business or consumer staples business or the cosmetic business to Godrej. They've built in a real estate business which gives you a embedded value for the listed entity, and Raymond, blink of an eye, in just 4 years has been more like 7x. Andrew, what's been your favorite, where have you allocated capital which is purely based on Indian mass consumption growing? I mean, what is the best consumer play?
Actually, we've been playing the beverages, on the premiumization, from both alcoholic and non-alcoholic beverages, and I think that's something that's played out very well over the past few years. I think that's it's still a runway which I think has it's a very long runway, but as per capita GDP moves higher, and people start spending more. I mean, I'm sure your coffee is from one of the outlets downstairs on your building. So, that's where people are heading, and people are experiencing more and want to experience more, and particularly with the younger generation. So I think the premiumization is something which is whilst if you look at, say, the alcohol companies, it's all about premiumization. That's where they're getting the big uplift in margins. So that will continue, and that's really why I feel we want to play the consumer kind of side of spending, because I think that's still a very early kind of days in terms of the move towards premiumization. So I think it's a great theme, but it's something that's not going to go away from us.
Taken. Trent for now, of course, has done quite well for itself, and Tata Consumers is the other one that we have been flagging out. It's up almost 4% as we speak. So good gains coming in on Tata Consumers, and that at a time when the rest of the market is actually coming off. Time now to take a short breather on the show. Don't go anywhere.
For the Bank Nifty, red for the Sensex, but the small cap index is just about holding on very, very nicely. Naresh, just when it appears that the Bank Nifty is ready to go and HDFC Bank will do the honors of showing some leadership, it just fizzles out. I mean, I don't know how many times we've discussed that Bank Nifty acha lag raha hai and HDFC Bank is on a verge of a breakout. The problem is the breakout never happens. So see, Andrew, look at Andrew also. The poor guy is waiting. HDFC Bank is not going higher. Right, Andrew?
So we've had a lot of false starts across the board. So ICICI Bank came close to 1100, faltered. But today, HDFC Bank has crossed that 1470 mark and it is sustaining. But on the same day, you see Kotak Mahindra Bank take a dip. You have Axis Bank taking a dip. So the bias is positive. Momentum is not coming up. So if you get a momentum on one banking name, the other one flops. But the structure is very clear. Slowly and steadily, the Bank Nifty has come to 48,000. It's coming on verge of a major breakout. So once the flows shift, it could be a breakout which would surprise on the upside, because the more it tests a resistance level, the higher the chances of a breakout are. So my view is large cap banking could surprise, but one will have to give it a little more time.
Okay. City Union Bank up 3%. I think, Kunal, you were speaking about it in the morning?
Yeah.
City Union Bank.
Yeah.
Okay, where is that one headed?
So I think we were discussing this on the chart busters. 145 was the breakout point for the stock. 155 is the first target. This takes the stock back towards Jan 2024, where the stock started to get to first phase of correction. And I think beyond that, we could be looking at a retest of the previous major highs, 175 for City Union Bank.
Andrew, what is your view on small banks, they are not expensive by any yardstick. Okay, large banks have CASA, they have right to win, they have great brands. But the incremental growth in small banks is actually not bad. If I look at, let's say, a Federal Bank, City Union Bank, throw in a Karnataka Bank, quietly but clearly they are growing at 15-20%, which is actually quite enviable given that large cap banks are struggling.
It is, and I think that's why you're seeing the the outperformance of some of the PSU banks and the smaller banks against the large banks. And I think that the concerns on the large banks remain, right. It's all about NIMs and then the unsecured loans and possible RBI intervention. So that's been playing on investors' minds, whereas the smaller banks are not having those problems right this second. So I think it's a matter of time, and that the large cap banks will perform. And I'm saying that if the commentary in the results season is more positive, that we're that the worst is kind of over, then you'll see a very strong rally, because I think everyone's kind of underweighted the large caps in terms of the banks, in terms of foreign investors in particular. Been using the banking sector as a way of when they got redemptions in their emerging market funds, of taking money off the table. It's liquidity as well, and of course with HDFC as as a bank, there's a possibility of this MSCI kind of increase in weightage. So I think that's something that the market is continuing to kind of favour. And then maybe that's why you're seeing this accumulation and stable kind of price move upwards for HDFC Bank compared to the other large banks more recently.
That's HDFC Bank, although it's been quite a steady show, right, Kunal? Almost 1.5% on a daily basis.
Yeah, I think, and over the last 1.5 months, see, because we have to look at this in the context of the Jan selling for HDFC Bank. The selling was very sharp, very steep and very sudden. So from 1700 odd levels towards a point when the stock had come back towards 1350, 1360 mark, and that too in a matter of just 1.5 odd month, or in fact less than 1 month for HDFC Bank. Now for the stock to recover, the process is going to be very slow, gradual. But in the process of moving up higher, if the stock breaks resistances, shows signs of resilience, and there's incremental or rather slight increase in volumes for the stock on the way up rather than on the way down, then we see this as a change of a sign in terms of trends for HDFC Bank. And over the last 1 month, we've seen the steady change so far. So maybe the stock is not into the thick of momentum. That may probably come back once the stock breaks past about the 200-day moving average. But as of now, I would believe that one should look to play for another 40 to 50 rupees points on the higher side for HDFC Bank.
Okay, point taken. Andrew, what's your view on PSU stocks? I mean, last year it was all about the PSU power names, defense names, railways, and even other verticals which were actually perking up, oil and gas names to add to that list. Do you think this year probably one should be a lot more tempered, both in terms of expectation and maybe book some profits? Or do you think given the entire turnaround, there are more legs to the rally, and this year again probably could be another uptick for them?
It's a great point, and the way I answer it is that the sectors you mentioned, defence, railways, oil and gas, it's full of PSU stocks. So unless I still feel like the kind of renewables, power, defence and railways, the spending is going to continue by the government. There's no two ways about it. So you're led towards the PSU side of the stocks there anyway. So the kind of long-term theme playing out there is hard to kind of ignore. So you have to be in these stocks. I don't think you can just say because it's a PSU. I think you need to forget that and say they're in the right sector at the right time where there's spending going on, and they will capture a lot of that market share of the new orders. So therefore, whatever ratings that you see at the moment are probably way below what they'd be in 2 years' time, with the earnings growth that you'll see because of that order kind of surge over the next 2 to 3 years.
Well, the one thing which is on everyone's mind is definitely the onset of the hotter summers. It's been getting hotter by the day, at least here in Mumbai. And the IMD is predicting that's pretty much going to be the case for the entire country. And they are warning about prolonged heat waves as well. In fact, we did speak with Nilesh Gupta from Vijay Sales about how he anticipates consumer durable sales are going to be, or whether they're already picking up. And here's what he actually told us.
Now, this year, as per the IMD multi-model coupled model forecast, it shows that most parts of the country are likely to experience above normal temperature during the season, April to June, as well as April, except a few areas of Northeast and some pockets of Northwest India and along the West Coast. Otherwise, almost all parts of the country we are likely to get above normal both maximum as well as minimum temperatures. Once we say that this is being an El Nino year, generally El Nino year it has been seen that we get above normal temperature. So when you have a temperatures are likely to be above normal, we also likely to experience above normal heat wave days over most parts of the country.
I think this year we are in for a good summer sales. So what we expect is this year, the way things are spanning out, the way prediction is there for heat waves to be of 15 to 20 days, we should see an upward of at least 20% growth this year over last year. And if things fall in place, it could be a little more also. And for the first time in so many years, I'm feeling if this is what is going to happen, possibly during the fag end or maybe a little over, we may see some shortages also happening of these cooling products.
Hot summer, and will that have an impact on white good demands? Will that have an impact on air conditioning demand? Well, some of the managements, they do feel that it will have impact per se. Some stocks which are bouncing right back up from the, I wouldn't say from the lowest point of the, but they're definitely moving towards higher points. BEL, you've got Aditya Birla Capital, you've got Zomato which has recovered, and Z also is marching towards the day's high. So some traction clearly is visible. In fact, Power is having a strong day. Reliance Power, Suzlon, what else? SJVN, that is having a strong day, so to speak. You've got a solid price action even in NTPC. So some of these stocks are actually having a good day, so to speak. When it comes to the value transaction, which is where I always look for interesting names, I think Jio Financial Services volumes are strong, but price action is not strong. And then Vedanta. Naresh, we've not discussed Vedanta. I mean, could this be the stock of 2024? It has done everything what typically you've liked in the past. It has consolidated for years now. No one likes it. No one owns it. And now when the cycle tide will turn, this could be the one which suddenly will start flying.
So starting off, I have a bias here, I have a position. But if you look at Vedanta, the way to look at it is the stock price looks like the all-time highs are at 430, 440. But as of today, if you add up the dividends and if you adjust it for dividends, the stock has hit a new all-time high. So it does not really show you the kind of, say, the move which has happened over the last 2 years. So the stock has actually crossed into new all-time highs today on a dividend adjusted basis. In the short run, for the last almost 2 months, it made 3 attempts around the 285 mark. Also, say July, August, that was a time where it was 285 to 90 was a resistance. So roughly 6 to 8 months of a breakout. Three bottoms done around 255, 260. So a classical short-term breakout, which would have a price of 350 in the short run. So looks very positive. And the whole metal and mining space, it's not just India. You look at the Dow Jones metals and mining space, it has hit a new all-time high. You could pick up any metals and mining stock, commodity stock across the world, and we are seeing breakouts. And you look at the CRB index, which is composed of multiple commodities, it has hit a multi-month, multi-year high. So the structure is there setting up for a commodity cycle. And a lot of names across the board have gone back to the prices where they were in 2021 and crossing that. So even a Hindustan Zinc actually looks interesting on a dividend adjusted basis. The stock is 3-4% away from an all-time high.
Andrew, always having you on the show. We let you go on that note. Let's get in some closing trades and strategies as well on that note. Kunal, what's on your list?
So I'll go with SAIL as a buy. The stock confirming a breakout above 140.42 mark, which was the previous resistance point for the stock on the weekly and the monthly time frame.
SAIL, that's a buy on dips from Kunal. Naresh, what about your closing trade?
Again, a metal stock, JSW Steel, which has broken out, still away from an all-time high, could actually go towards an all-time high in the short run. So looking at it as a short-term trade.
Welcome back. Well, the market continues to be under pressure. In fact, the Nifty now threatening to go below the mark of 22,400 because that's the level we are at right now. Though the mid cap and the small cap indices have managed to hold on, and the Nifty also, to be honest, in the last few minutes has managed to perk up. It's M&M which is up 3%. Bajaj Auto is doing quite well, though Hero MotoCorp is actually in the red, down about 3% in the trading session. So let's start with that. Rajat Sharma, the founder and CEO of Sana Securities, is joining us on the show. Rajat, the auto numbers for the month of March were rather disappointing. What's your top bet within the auto sector, whether it's the two-wheeler space, passenger vehicles, or the commercial vehicles?
Yeah, no, absolutely. I think the only number that was disappointing, I think what you mean is Hero Moto, where I think the overall sales were 8.6% down. But again, the silver lining there was the export sales were up by a mile, actually. And, it's very difficult to say the reason why sales did. Just to give you a disclosure, I hold Hero Moto, and I've been consistently recommending the same stock on your show. I really like two-wheeler space, and I've recommended buying this stock. But look, quarter on quarter, what happens? It could have been, they didn't manufacture enough, they didn't advertise enough. Because when you see Bajaj Auto, the sales are 25% up. So, difficult to say. I really like the two-wheeler space, although at this point, I think a lot of stocks are a little overvalued. I bought them at a price far below where they are trading. 2,800 for Hero Moto is where I got in and recommended the same. So, even if you're a new investor looking to add some stocks to your portfolio, making a fundamentally good portfolio for a long term, you should add two-wheeler stocks, but don't buy them in a big chunk or as a lump sum. Just keep slowly moving into them. And today, stock 2.5% down is a good day to add a little of this to your portfolio. I think they're market leaders. They've got the largest share, and that's not going to get disrupted anytime soon.
Point taken. Actually, in the meantime, let's pull up some of the cement stocks. Dalmia Bharat, for instance, is up in the last few minutes. There's a perk up on Star Cement as well. A couple of other names like, the other cement names like Shree, etc. will also come up for you on the screen. And there's a sudden spike up happening on a lot of these names because reports are suggesting that finally the companies have managed to take a big price hike. Earlier as well in the month of December as well as January, there were reports of price hikes, but the company had to roll it back on account of demand not being strong. It seems like that now the demand is conducive enough for all of these companies to probably go ahead and take a price hike. Before we move forward, Naresh, your view on the cement pack and anything which is showing signs of breaking out?
The largest one, Ultratech Cement, which is coming close to a breakout. The recent swing highs at around 10,200. If that breaks, that would be a clearer breakout. So that's the first one. Second is Ambuja Cements, which is very interesting. The stock had made a top around 600 before the whole cycle, and then the stock fell all the way to sub 330 levels. Made a recovery, and the stock is now today at an all-time high. So a clear-cut breakout here. ACC is the next one, which still has that price point of 2,700, 2,750 to cross. So ACC still has upside and risk reward to be worth. So for now, the larger names are clearly breaking out into all-time high. So Ultratech and ACC look promising.
Other stocks which are actually holding out. We've already marked what the Aditya Birla Group is up to, but look at a BEL. That's been a very steady show, after them declaring their full year turnover. So that's looking very smart. Godrej Properties is holding out very well. Yesterday, there was a big spike in DLF, and today it's Godrej, which is actually taking a turn in the green. So holding out very smartly indeed. Rajat, just wanted to understand, what do you make of the real estate pack? Because that's had a very, very steady up move for the last 2 years, and it continues to be the same even now. Do you think there is still value on the table and one can still maybe add positions or get in afresh into any of the names?
No, I have not got into any of the real estate stocks. Although I've been reading myself about what's happening in this space, house prices and even commercial real estate is up about 30% in the last 2 years in many pockets of the country. But when I look at the listed players, there's a lot of unlisted players who are doing a lot of good work and coming up with projects. But when you look at the listed players, I think let's look at DLF. The stock is trading at valuations of 97. There was a time when it was available cheap around a decade and a half back. But right now in the listed space, there's nothing so striking at least that I have found, which makes me feel that this is a stock that you should buy. But again, real estate has a very long cycle. So once they do become the flavor to be bought, then the stocks move up really sharply, and that typically happens when there is in the post correction period of the market. Right now, I don't think any investors are going to get attracted to real estate.
935 rupees for DLF, 158% higher. There's a news report on Prestige also, where they have raised debt, I think, they want to scale up the rental business, where they're looking at raising money from Kotak Real Estate Investment and I think GIC, where they have some kind of a tie-up. 4% higher for Prestige Estate. It's turning out to be such a fabulous year for real estate stocks that it is absolutely unbelievable. No chance of any slowdown. I mean, no indications of any slowdown. Markets are really revisiting that entire real estate thesis. Macrotech developers. It went public post-COVID, so the recent data is not going to be, the recent data is very limited. But again, from what happened to the debt problems in their global bonds versus where they are right now, what a comeback it's been. Naresh, I'm going to change gears and talk about one NBFC which frankly has disappointed and continues to disappoint. That is PEL, Piramal Enterprise. Does not matter what the Nifty level is, this stock is underperforming.
So it's been a tough ride for the stock. The previous few times, every time it has come to closer to a breakout, it just flops out, something or the other comes up. So if you look at the last 4 months, multiple times it came closer to 960, 970, looked like a breakout and we got stopped out. There were cap downs over a period of time. And even post listing, the stock has had a problem around that 1,000, 1,100 mark. So it's been almost 2 years wherein the stock has done nothing. So for now, till the time it doesn't cross 970 again, would not be interested in. There could be better choices. A lot of housing finance companies have given a breakout. So that could be a sector to watch instead of PL.
But time now to go across to my colleague Sharad. He's been standing by, working his phones to help us understand what the chatter is in dealing rooms today. Sharad, which is the stock on everyone's radar in dealing rooms?
Well, yes, in focus is five-star business finance, and what we are hearing from the dealers is buying is coming in for domestic institutions, which also may include a PMS. Now, importantly, the buying has been seen for the last 2 trading sessions, and the volumes have also picked up. For the last 2 trading sessions, 15 lakh shares of exchange hand, that roughly translates into 0.51% stake in the company itself. And interestingly, company will be meeting a UK-based FI, also MG Investments, on April 4th. Apart from this, the key DIs already invested in the company include the names of HDFC AMC as well as 361 Fund. Now, importantly, also there is a buzz in the street that the PE funds may be looking at an exit also. And do remember, there are larger names like Sequoia and also TPG still there. And of course, last year itself in December also there was some offloading of stake as well from the larger PE players as well.
Okay, there's been a lot of debate about what's going to be the fate of the small and mid-cap indexes. Here's Ravi Dharamshi sharing some insight on the same.
Froth is a strong word, but if you had to say that word, it is more in the SME space than in the mid and small cap space. The degree of euphoria or bullishness varies from space to space. So SME has the maximum, kind of froth over there, which has kind of corrected itself due to the regulatory nudge. And I think it was more definitely required. But mid and small cap, you can say, are probably a standard deviation above its long-term average, which makes it on the expensive side. But I won't call it, so to say, a euphoria or a bubble. That's a too harsh a term in my opinion. And on the other hand, the large cap space is definitely looking attractive. So I think we have the entire gamut spectrum available in the market. I won't be worried about a small spot in the market being a little frothy, because that would be like tail wagging the dog. PSU is a basket that is defined by the market. We don't look at government-owned companies as a separate basket. What we look for is themes that cut across all sectors. So what has been exciting for us is, so if there is a energy transition as a theme, or whether it is financials, revival in the economy, those kind of themes. Now, if there are players within PSU sector that have the right to win that space, that is what excites us. So for example, defense is one thing that we were bullish on for the last 3 years. There is only PSU defense as a sector that exists. Private sector is virtually non-existent. So in that kind of a case, absolutely we would buy PSU defense companies. But if you tell me about banking, larger banking companies, then I don't believe that any of the PSU banks have a right to win over there. They are a beneficiary of more a cycle rather than any kind of and the valuation arbitrage existed between the PSU and the private. I think that valuation arbitrage has played out. Now incrementally, I think only a company or a bank that has managed to stand itself apart from the rest of the pack, men and the boys will be separated, so be on the lookout for that.
Okay, men's will be separated from boys, or men will be separated from the boys. That's the word coming in from Ravi Dharamshi. But in the meantime, take a look at Paytm. That's also showing signs of a bit of a perk up. We haven't spoken about it over the last couple of weeks because that stock was fairly subdued. But in the last half an hour or so, that's managed to inch up higher. And let's see what the likes of Policy Bazaar and Zomato, etc. are also up to, because from the lows, of course, these stocks have recovered quite a bit. In fact, Zomato, for instance, was trading at its recent highs around 180, 190 bucks. Sana, Rajat, what's your view on some of these new age tech companies?
No, that's all right. A lot of people associate me with that. That's all right. So, when it comes to new age technology stocks, I'll again give a disclosure first. Paytm is a stock which I had in my portfolio. I got out of it when it fell around 12-14%. So, in fact, I had substantial positions in Paytm. The highest in one of my portfolios was about 8%, just to be very clear with my disclosure. I really liked this stock because after, at 2100 where it got listed, it was a bad stock. But at 600-700 odd levels, it was a good stock if the government had not taken such a strict action on them, because finally they had things going for them. They had a very clearly defined revenue model. They had clear verticals and they were about to turn profitable. And, personally, I think, if things revive for them, this is not a bad level to buy this at. They were eating into market share of a lot of these larger banks, private sector and public sector banks. And, every time I hear this commentary on banks, one of the reasons why I got into Paytm and why I like, a lot of the NBFCs and stocks like tech-driven financial services companies is because I've been saying this for about 5-6 years now. Year on year, I come and say there's a lot of talk around private sector banks. But, if you look at, I think I had this chat with Nikunj once. If you look at a lot of these private sector banks, you look at the likes of Kotak, Axis, HDFC. If you look at their past 5-year stock price performance, none of these banks have delivered anything above 25 to 35%. Since 2019 until 24, this is 5 years. So I'm going pre-COVID levels. And, that's most of these private sector banks, the large private sector banks, whether it's Axis, Kotak, IndusInd, Axis, all of them, 25 to 30. Their FDs have delivered more return than these banks. ICICI Bank is one exception, and I think that's largely because ICICI Securities is now merging into that. So most of the run-up has come in the last 1 year. But a lot of these, you look at the core business of these banks, a lot of the consumer loans, whether it's auto, personal loans or car loans, there's a lot of NBFCs who are doing that. Fee-based income, the share was increasing, which was the big story, is now being eaten into by a lot of the other service providers. So I really don't know what's the future of banking. If you see the West, the same trend has happened there. A lot of the traditional old large banks have suffered for many years despite the bull market runs that you've seen there. And I was doing a deep dive into the banking sector, from April 1st, 2020, which is the COVID bottom, till 1st April 24, which was yesterday. So the last 4 years, if you see the private sector banks, they've on average about 2.25%. And the PSU banks have on average grown about 4.5%. You have stocks like UCO Bank, Bank of Maharashtra, which are 9-10 rupees to 50-60 rupees. But if you think about it, who's opening bank accounts there? The reason they've done well when you look at their accounts, their balance sheets, is because they've reduced provisionings over the years because interest rates had fallen until in that COVID period. And the last 1.5 to 2 years, interest rates have gone up from 4% to about 6.5%. So that net interest margins have increased. But going forward, as I've said many times before, I don't think banking is a sector which will be what it was in past. So, it's not performed well for the last 5 years, no matter which bank you look at, and it's likely to change.
Yes, and you'll appreciate the spirit of the question here. Your securities firm name is Sana. Is that somebody in the family? How did you come up? What's the story behind it?
No, Nikunj. So the funny thing is that there is a lot of people ask me this. I don't know any Sana at all. I've never known any Sana. It's a word that I really liked. I heard it in one of the old Hindi kavalis, and Sana. The word means glory of God. It's an Arabic word. It's glory of Allah. So I really took to the word, and it stayed in my mind. So when I started my own firm, there's absolutely no reason why I named it that, but that's that.
Recording of the show. Share it with your family, especially with your wife, I'm sure. I shall send it to you after the show, Rajat. Okay, 15 minutes to go, about 13 minutes to go. Let's see where market's about to shut. The two real, outliers today. One is Aditya Birla Capital. Second is Aditya Birla Retail, Fashion Retail. Vedanta 5% higher. SAIL 5% higher. JSW Steel 3% higher. Nuresh, now that the index globally, which you pointed out, and thank you for pointing that out, the Dow Jones Metal Index had hit a life high. How similar is this to what we saw, let's say, in 2021? Because I distinctly remember when the Dow Jones Metal Index had hit an all-time high, it kept on making new highs for at least 2 years more. So are we in for that kind of a deep rebound in metals now?
So that's the bet. We played it similarly in 2021. It was via SAIL, Nalco, as well as Tata Steel. Very similar structure. We saw it, given that we have, say, more pricing for metal prices across the world rather than in India in this cycle. So the first index which generally breaks out has been Dow Jones Metals and Mining. So we've seen that breakout happen. The last time when that breakout happened, there was at least a 25% move in the short term on the index itself. So that was very interesting. So right now, whether it becomes a 20% move or a 25% or a 15% is a tough call. But from here on, the upside looks interesting. I would go with a 15-20% upside in most of the names on the metal pack over the next 3 to 6 months.
So that's a view coming in on some of these buzzers as well. But in the meantime, in terms of stock-specific action, it is Tanla Solutions which has actually managed to inch higher. Godfrey Phillips is doing quite well. Electronics Smart India, India Bulls Real Estate. These are some of the other top gainers right now as we speak. Separately, gold, of course, has been one, asset class which has been doing quite well. And since we're talking about the metal stock, Kunal, I wanted your view on the charts of gold in India. I think you told us that it already hit the mark of 70,000. What next?
So I think now in terms of dollar denominated prices, 2280 is the resistance for gold on the dollar denominated terminologies, and I think in that aspect we could be looking at least another $200 up move for gold, because the breakout which had happened was, I think, 2080 to 2090 was the breakout point for gold. This was almost a 2-year, 3-year triple top breakout for gold in that aspect, and it was almost like a 300 to 400 pointer range the asset class had gone into in the last many years. So that breakout potential is almost like a 300 to 400 pointer move for the for gold on the upside. That could probably, of course, gel up with the Indian rupees, gold prices moving up higher. So my expectation is that 70,000 could now be maybe considered as a fresh base for the asset class, and we could be looking at higher prices over the next 6 months to 12 months.
Okay, let's also throw light on what's really happening within the auto pack, and does the volatility in the market really warrant caution, or is this a temporary blip right now? Where is it that investors should be looking at? Any key themes or stocks to look out for? Here are some views coming in from market experts.
Pharma industry, let's take for example, the total industry size is about $50 billion. Total market cap today is $200 billion. This $200 billion in last 20 years has grown at 18x, right? And many companies in that period has become 100x and 200x. So a sectoral growth wealth has got created. This $50 billion, by the time Amrit Kal ends, will become $450 billion. It means Pharma itself would have a market cap of $2 trillion.
Asset management companies also we continue to evaluate. At this point, I'm not sure that we have any one of those in the AMC portfolios. Certainly in offshore portfolios as of now, we have very limited exposure to the asset management space. But we do have distribution companies, wealth management companies, as well as some of these other intermediaries which service the asset managers and wealth managers.
There are certain pockets within, like tourism, hotels and tourism, which looks very exciting to us. And I think that is a space where we may have increased our weight in the interim as such. So that's why overall there may be some replacement happening there, but that's a space that we remain fairly bullish on.
The view coming in as to how you should look at FY25, but the starting of FY25 hasn't been great for the aviation sector because just yesterday we got the news that Vistara has actually cancelled as many as 50 flights. There could probably be more. Even the aviation ministry has taken notice of the same and they have questioned the company and asked them to supply more details as well. But first up, let's take it across to my colleague Sumit, who's joining us with the latest on this. Sumit, tell us what's been the impact on the aviation sector. Are we seeing huge queues or big rage amongst the consumers?
Well, as the trouble for Vistara is brewing with more flight cancellation due to unavailability of crew, today Aviation Ministry and Aviation Regulator DGCA stepped into the whole issue. Aviation Ministry has asked Vistara for a detailed plan and is closely monitoring situation. At the same time DGCA, Aviation Sector Regulator, is also closely monitoring the situation. It has asked Vistara to submit all the details about the flight cancellations and delays as well. It is also monitoring situation as to what steps are being taken so that the inconvenience cost to customers is minimum. Vistara has issued a statement saying that the flights cancellations are happening due to many factors including unavailability of crew, taking many steps including clubbing of many flights, also getting bigger planes. It is clearly working to minimize the inconvenience cost to passengers. But today Civil Aviation Ministry and DGCA has also stepped into the whole issue.
Right, okay, that's the take coming in on what really is happening with Vistara right now. But yeah, some of the Aditya Birla Group companies continue to hold out. There's Vedanta as well, higher 5%. SAIL, of course, is looking very, very strong indeed. And Tata Steel as well, I mean, of course, it's petered down somewhat and has had a choppy ride today, but that also is holding out in the green as we speak right now. Naresh, given that metals made a very, very strong move, you know, all through last week, just wanted to understand directionally, what is it that you see for metal charts? I know we've talked about Hindustan Copper being the strongest, but anything else which is looking attractive for trade?
So the whole pack look interesting in terms of stocks which have not gone up and the risk reward is still good is a JSW Steel, a Hindalco. So Hindalco, the previous all-time highs are closer to 620 to 640. The stock is at 570. Recovery has been good in the stock. So that is one. Then JSW Steel, which went through a long sideways patch after topping out in 2021. And now is very close to a new all-time high. So that's the next one. Jindal Steel has been a leader and first one to always knock off new all-time highs. So at current levels, I will go with a JSW Steel and a Hindalco for it.
Coming in some of the metal names, but before we start wrapping up the day, the BTST ideas, Naresh, what's the buy today, sell tomorrow idea?
So first is a buy on JSW Steel itself, stop loss at 864 and a target price of 890 to 900. Second is a buy on Mahindra and Mahindra, which has been showing relative strength and coming close to a new all-time high. A stop loss at 1950, target price of 2050.
Despite the move, that's a BTSC trade. Kunal, what about you? What are you spotting on the charts?
So I'll go with the first one, buy on Aditya Birla Capital. That's a chart which looks attractive at 200 as a breakout. Targets of 210, stop loss at 192. And Bajaj Finance is apparently a stock which is holding up to above its 200 moving average. After almost like a 1,000-point correction below this key moving average, almost a month and a half back. So that's a strong case of a turnaround for Bajaj Finance. Buy with a target of 7,600, stop us at 7,000.
What about fashion? Aditya Birla Fashion, that is?
Yeah, both
considering
fashion
that's
and
the
finance. I mean, capital both look attractive.
Okay, so that's about the Aditya Birla group of stocks, but we are wrapping up the pretty much in style, because yes, the frontline index hasn't done much today. It's been fairly quiet between that 22,400 to 22,450 kind of range. But just as we're ending the day, there is a bit of a green on the screen right now, so that's something that we'll be happy with. But the banking index continues to be in the red, just mildly so, though the mid cap and the small cap index have managed to further pile on gain after that big rally that we saw yesterday. But for other stock specific moves and what's been the highlight of the day, let's take it across to Winnie.
Absolutely, at least closing the day on a slight bit of a positive note for the benchmark indices. Nifty almost trade for 22,450 levels is what the Nifty is managing to hold on to. Sensex down almost 0.07%, almost on the positive side as well. Managed to see a bit of a recovery from the day's lowest point is the benchmark indices. Nifty Bank, on the other hand, which was trading in the green, has slipped below, and it will be closing the day almost flattish. We could say nothing exciting for the Nifty Bank. All the excitement came in from the broader markets is what we could highlight, and that's why the run-up that we've seen in the Nifty mid-cap looking at pretty at 1.15% in terms of an uptick that we could see almost more than 1% for the Nifty small cap as well. Names and the sectors that have managed to do well, and in the terms of the top pullers that we have seen, or top stocks that have done well in the Nifty 50 today, let's pull up the auto names that we have. M&M, what is Hero Motor doing, Bajaj Auto, all these are surely the ones to watch out for. We also had HCL Bank making the list in the Nifty 50 among the top gainers today. Other than that, let me look at the other names that are doing well from the small cap side. And the mid and small cap side, we did have AB Capital, AB FRL, all those buzzing in trade on the back of news flows. AB Capital on the back of a brokerage note that we had. So yes, that's interesting to watch out for. From the banking side, we also had SBI, that is in terms of a good contributor coming in from the Nifty 50. Other than that, in terms of which stocks in the Nifty small cap 100 are at a 52-week high. We saw Reddington, Cochin Shipyard, Graphite, all of them seeing very strong gains. While in the mid cap, we did have SAIL, JSW Energy, even something like the Volta saw a very strong up move. The summer stocks seems to be a bit of a trend that have been shaping up. Voltas, Havels, all these are the ones that we should watch out for. Look at Blue Star as well, closing the day with gains of almost 2%, more than 2% as well. Let's move on, talk about real estate names. We did have a brokerage note that came in on the real estate stocks. So we did have Prestige, Godrej Properties, Oberoi Realty, all of them in focus today. And we'll see all of them are ending on the positive side as well. 3% gains, more than that is what we're seeing after we're seeing the note from Stanley. Other than that, let's pull up the charts for defense names. BL, HCL, all these names, all these companies yesterday reported their Q4 performance update. So today also we're seeing a run-up coming in because we did have a brokerage note from Jefferies that was a bit of positive side for these defense names. Defense names continue to see an up move. BL, HCL, data patterns specifically in focus on the back of that brokerage note that we saw. Tata Tech too saw a jump up coming in and trade today. Why? Because they have signed a large JV with BMW, and on the back of that, Tata Tech picked up pace at the end of the day, second half of the day, 4.3% uptick for Tata Tech. And AG Infra on the back of order wins. Patanjali, not that much of an excitement because the Supreme Court was dissatisfied with their reply. And obviously, other than that, Som Distilleries are some of the other names that have been in focus today. So mainly today what market was led by was the mid and small cap, advance decline ratio in the favor of advances versus decline, and Nifty managing to close on a slight bit of a positive and a green note.
If you like this video, then like, share and subscribe to ET Now.